I've never seen the demand for precious metals even remotely close to what I'm seeing right now, ever in 34 years. Not even close, not by a million miles. And I will stick to what I've been saying on your show for the past 2 years. This market will define itself by the inability to source product when the music stops.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. Today, I present to you a compelling argument that might initially sound far-fetched, but is rooted in a realistic analysis of current events and economic trends. The crux of my discussion revolves around an intriguing possibility: the potential for silver prices to soar to an unprecedented $800. Yes, you heard that correctly, $800 per ounce. Let's delve into this scenario, drawing insights from recent financial news and market analyses. When discussing the potential trajectory of silver prices, the role of the Federal Reserve's monetary policy decisions cannot be overstated. These decisions create ripples across financial markets, significantly influencing the precious metals market, including silver. Let's explore how these elements intertwine to paint the bigger picture. The Federal Reserve's interest rate decisions are at the core of this dynamic. When the Fed opts for lower interest rates, it often leads to a weaker dollar. This in turn makes silver more affordable for holders of other currencies, potentially ramping up demand. Additionally, lower interest rates diminish the opportunity cost of holding non-yielding assets like silver, making it an attractive option for investors. But it's not just the actual decisions that matter. Market anticipation and reaction play a crucial role too. If investors expect a dovish stance from the Fed, it could ignite an early rally in silver prices. In contrast, if there's even a hint of a more hawkish approach, silver might face downward pressure. The economic projections released by the Fed, particularly regarding inflation and economic growth, also have a significant impact. For instance, if the Fed projects higher inflation rates, silver might gain traction, as it's often seen as a hedge against inflation. Moreover, decisions related to the Fed's balance sheet, especially those concerning quantitative easing QE programs, are pivotal. Expansive QE can lead to concerns about inflation and a weaker dollar, both factors that can nudge investors towards silver. Another aspect is the influence of the Fed's policies on market liquidity. In times of high liquidity, investors often have more capital to allocate, and some of this might find its way into commodities like silver, driving up its price. It's also important to note that the Fed's influence isn't confined to the US market. Given that silver is a globally traded commodity, the Fed's actions can have worldwide implications, affecting silver prices on a global scale. Finally, the psychological aspect cannot be ignored. The Fed's policies significantly shape investor psychology. A dovish Fed can instill confidence, leading to more risk-taking and potentially higher investments in commodities like silver. In essence, the Federal Reserve's policy decisions weave a complex web that influences silver prices. From affecting the dollar's strength to shaping market liquidity and investor sentiment, the Fed's stance can significantly dictate the direction in which silver prices move. Indications of the Fed maintaining or lowering interest rates or adopting a less aggressive monetary policy are closely scrutinized by silver investors as potential catalysts for price movement. The recent surge in silver prices cannot be examined without considering the geopolitical climate, particularly the escalating tensions in the Middle East. Such geopolitical developments can have a profound and often immediate impact on precious metals like silver. When tensions rise in key geopolitical hotspots like the Middle East, it often triggers a flight to safety reaction among investors. In such times of uncertainty, silver, alongside other precious metals, is frequently seen as a safe haven. This perception stems from silver's long-standing value retention and its status as a tangible asset, distinct from volatile equity markets or politically sensitive currencies. The specific dynamics of the Middle East conflict also play into this equation. Any escalation in conflict could potentially disrupt trade routes or impact the global economic landscape. These potential disruptions bring a sense of unpredictability to the market, leading investors to seek out assets that are seen as more stable or secure, like silver. The situation in the Middle East often has direct implications for the energy market, particularly oil. Fluctuations in oil prices can have a cascading effect on various sectors of the economy and can influence commodity prices, including silver. For example, a spike in oil prices can lead to increased inflationary pressures, which in turn might drive more investors towards silver as a hedge against inflation. It's also worth noting that market reactions to geopolitical events can be swift and pronounced. When news breaks about rising tensions, the immediate sentiment in the market can shift towards risk aversion. This often results in a quick uptick in the demand for safe haven assets, with silver being a prime beneficiary. Additionally, such geopolitical events can influence currency markets, often leading to volatility in currencies like the US dollar. Given that silver is priced in dollars, a weakening of the dollar in response to geopolitical tensions can make silver more attractive to international buyers, potentially boosting its price. In summary, geopolitical tensions, particularly in regions as pivotal as the Middle East, act as a significant catalyst for movements in the silver market. The perceived need for a safe haven during uncertain times, coupled with the potential economic implications of these tensions, plays a critical role in driving investors towards silver. As a result, escalating conflicts can lead to a notable surge in silver prices, reflecting the metal's enduring status as a refuge in turbulent times. In the intricate dance of financial markets, the role of central banks and their policy decisions are of paramount importance, and this is particularly true when it comes to precious metals like silver. The Federal Reserve's policy meeting is a pivotal event that holds the potential to significantly sway the prices of silver. As investors and market analysts keenly await the outcome of the Fed's policy meeting, the air is thick with anticipation. Currently, there's a general consensus that the Fed will hold the interest rates steady, but there's also a notable chance of another rate hike before the end of 2024. This delicate balance of expectations shapes the market's outlook and, by extension, impacts silver prices. Higher interest rates typically strengthen the currency, in this case, the US dollar, which can make silver more expensive for holders of other currencies. However, this relationship is not always straightforward. The Fed's decisions also signal broader economic health and investor sentiment. If the market interprets the Fed's decision as a sign of economic stability and growth, it could lead to a risk-on sentiment, potentially diminishing the allure of safe haven assets like silver. Conversely, if the decision hints at economic uncertainty or potential slowdown, it could bolster silver's appeal as a secure investment. The nuances of the Fed's policy meeting extend beyond just interest rate decisions. The Fed's quarterly economic outlook, which includes projections for GDP, unemployment, and inflation, provides crucial insights. For instance, if the Fed indicates concerns about inflation, it could stoke fears of a declining purchasing power, driving more investors towards silver as an inflation hedge. Moreover, the words of Fed Chair Jerome Powell during the press conference can carry immense weight. His comments and the tone he adopts can either reassure the markets or exacerbate uncertainties, thereby influencing the trajectory of silver prices. While we navigate through these intricate financial landscapes, it's essential to stay informed and updated. For those keen on keeping a pulse on these developments and understanding their implications for silver, I encourage you to subscribe to the YouTube channel Silver News Daily. Here you'll find insightful analysis and updates that can help you make sense of these complex dynamics. In conclusion, the Federal Reserve's policy decisions and economic outlook play a critical role in shaping the market sentiment and influencing the prices of precious metals like silver. As investors interpret these signals and adjust their strategies accordingly, we see the resultant fluctuations in the silver market. Understanding these influences is crucial for anyone looking to comprehend the movements in the silver market. The geopolitical landscape often acts as a catalyst for financial markets, and in the case of silver, it's no different. Recent developments in the Middle East have cast a spotlight on this dynamic. The escalation of tensions and the initiation of a ground offensive in the Gaza Strip by Israel have sent ripples through the global markets, influencing the prices of precious metals like silver. In times of geopolitical uncertainty, investors often seek refuge in safe haven assets, and silver, with its dual role as both an industrial metal and a store of value, becomes a particularly attractive option. This flight to safety is reflected in the upward trajectory of silver prices, which saw a notable jump from $22.70 to $23.07. Such movements underscore how geopolitical events can suddenly alter the market's mood and direction. The significance of these price movements is further highlighted when we consider the technical aspects of the silver market. For instance, a breach of crucial resistance levels like the 200-day moving average (DMA) at $23.26 can signal a shift in market sentiment. If silver prices continue to rise and cross this threshold, it may pave the way for further gains, potentially reaching next resistance levels at $23.69 and even approaching the top of the Bollinger Bands at $23.80. However, the market is a complex ecosystem, and these gains are not guaranteed. Should silver prices fall below certain levels, such as $23, it could reaffirm a downtrend. In such scenarios, supports at $22.94 or the 20-day exponential moving average (EMA) at $22.25 could come into play, offering potential stabilization points. As we witness these market movements and analyze their implications, it's crucial to remember that geopolitical events are often unpredictable, and their impact on markets can be complex and multifaceted. Navigating this terrain requires not only a keen understanding of market dynamics, but also a constant influx of up-to-date information and analysis. For those interested in staying informed about the latest developments in the silver market and understanding how geopolitical events influence its trajectory, I highly recommend subscribing to the YouTube channel Silver News Daily. Here, you'll find comprehensive coverage and expert insights that can guide you through the complexities of the silver market. In summary, geopolitical events like the rising tensions in the Middle East play a significant role in shaping investor sentiment and influencing the prices of silver. The reactions of the market to these events and the technical levels they breach or hold offer valuable insights into the prevailing market sentiment and potential future movements of silver prices. In the world of finance, forecasting the future is an intricate dance of analyzing trends, understanding market dynamics, and sometimes making educated guesses. When it comes to the possibility of silver hitting the $800 mark, several factors and prevailing conditions suggest this isn't as far-fetched as it might initially seem. The confluence of factors we've discussed, the Federal Reserve's policy decisions, the shifts in treasury yields, and the reactions of the global markets to geopolitical events all point towards an environment where precious metals like silver could see a significant uptick in value. With investors potentially looking towards silver as a hedge against inflation and a safe haven amidst geopolitical tensions, the demand for silver could rise, propelling its value to new heights. Moreover, the technical analysis of silver's price movements shows that once key resistance levels are broken, the path upwards could accelerate. This, combined with the broader market sentiment and the underlying economic conditions, sets the stage for a potential surge in silver prices.